Welcome back to Total Money Management. We're going to be covering off the week that was ending May 30. How we doing, gentlemen?
All
We're
good.
good. We're back.
Bit cold, bit wet,
Yeah.
A little bit of both.
and a loss in the state of origin. Thoughts and prayers to Queensland.
Oh, what a shocking game.
Yeah.
From I'm not sure if you...
At least the girls won.
Oh, did they?
Yeah, but they didn't. They lost the series.
Mm-hmm.
Anyway, there's something much more important to talk about, surely, in the world.
On a more positive note, we've changed the layout. We'd love to know what you think. It's
On a
huge.
way more exciting note,
Yeah,
we
woo-woo.
changed the week that was.
Hey, look at that, folks. Don't say we're not innovative.
There's new things. Well, we're kicking off with the quote of the week, and it's just a reminder, the mutual fund industry is not an investment management industry, it's a marketing industry.
They're crooks. They're all
bloody
crooks.
good marketers as well. I think, Steve, you were just saying before, there's been a bunch of new ETFs. Well, there's new ETFs getting launched all the time.
Yeah, but it's just it's just a reminder that you hear they've got to sell stuff, right? We've all got to sell something, right? And I'm not against that, but it just needs to be, particularly with the finance industry, it just needs to be buyer beware, right? Because there's just, and particularly at the top of a market, when there's a bull market. And I think we spoke about this maybe a year or so ago with property. You know, like my Facebook feed is just full of people trying to find me ways to flog me real estate, right? Yeah. Albo says, you get a 5% deposit and stuff. Immediately there's 400 ads on Facebook going, here's how you can use Albo, come and talk to me and all this sort of stuff. And it's the same in the finance industry. As soon as now there's Bitcoin ETFs, right? There's private equity ETFs, there's all of these things. And what they're doing is sitting around going, how can we get more money out of people?
Yeah.
How can we get more fees? I've got an idea. Now there's leveraged single companies, right? So instead of buying NVIDIA, you can buy 3 times NVIDIA, right? So that's what,
It's a sure, fast way to get liquidated.
Well, yeah, exactly. And, and the people who buy it are the poor suckers who don't know what they're doing.
And especially, right? I think we spoke about it last week or the week before, the retail investors at the minute are the highest influx of cash into the market ever.
Yeah.
So you look at that and then you add on 3 times NVIDIA and you kind of like, just take it easy a little bit, guys.
Let the whales sell their bags.
Yeah.
A little bit, yeah.
Well, look, the big issue this week that we want to talk about is that everyone's in a tizzy about the US deficit. And like Steve, everyone's got their opinions. Our opinion is that the deficit's just fine and probably the main reason as to why they've done so well over the last few years.
Indeed.
Yeah. Is there anything you want to cover there?
Well, we're covering it in Economic Myths.
That's true.
The new section.
Yeah. Well, so you have to wait for that.
Yes. But generally, just highlighting, it's an issue because it impacts investors' thought processes. Okay, so if people are going, what the hell are they talking about? What I'm talking about is the way the government deficit affects investments that you have. Okay, and so, but yes, we can talk about that further on.
Hold your horses, Steve.
Yeah, wait.
We've got, look, there's boomers versus every other generation. Seems to be a constant topic. You boomers have had it easy. You could buy houses for $10 and sell them for.
No, we had it worse. No, we had it worse.
And that seems to be the spark of the debate every week.
Doesn't change the situation though, does it?
Yeah, it just the argument is rates are low now compared to boomers. I'm an N boomer, so I'm sort of across. Boomers start in 62. I'm born in 63, right? So I'm quite a boomer. But the idea or the argument is young people today are worse off than the boomers, right? Now, the argument is correct, but it's a little bit more nuanced. It's not just that straightforward. But there is no doubt that young people today, even though rates are lower, find it harder. And what I'm trying to point out there is, yes, because you're not being paid enough.
Well, yeah, wage growth hasn't kind of gone up in line with property or everything.
Well, that's exactly right, Tom. That's exactly what's been going on since 1980, right? The wages have been falling and everything else is going up. And part of the problem is, which we're going to do in a masterclass, is the explanation about why the wealthy are getting wealthier, right? And it's because the young people are not being paid enough. So the problem is, where is most of the wealth? Well, most of it's with old people, right? And for two reasons. One is, well, sorry, you guys have been working 15 years. I've been working 45. So, you generally think Steve will have more money.
Yeah.
Okay. Secondly, yes, I bought a house, I bought a unit in 2000, but if I was a, true boomer, I'd have bought a house in about 1990, right? If I'd have bought then, I wasn't buying then to go, man, I'm going to get in on this property gig. I was buying a house because that's what you
wanted a home.
Well, you want a home and you want to have a wife and kids and stuff, right? I wasn't in 1990 going, man, I've got to get in on this property ladder stuff, right? Because there wasn't, they weren't going crazy then.
Yeah.
So again, it's also a result of just holding it. That's the equivalent of coming back to me. I bought Commonwealth Bank in 1999, right? And it was $26. Yeah, 28.20, right? Now it's like $840 million or something. It's just crazy. It's $170 or something, right? That's like coming to me and going, dude, that is so unfair, right? Well, no, it's not. It's just that they sat there and they accumulated, and now it's worth $170.
Yeah.
Do you see what I mean? It's not. You can't. What I'm saying is, you can't blame boomers because they bought a house. What you can do is you can blame successive governments for not increasing wages and putting it further and further out of reach of young people, and the people who benefited are the people who already had assets, right? And what are the assets? The assets are property, right? So most there's plenty of rich young people at the moment, right? I was just reading about Nathan Birch, right? He's got $250 million worth of property. Well, are we complaining about him?
Yeah, that's a good point.
See, it's about, and again, we've got lost in the young people versus old people rather than saying, no. Let's talk about who's got the money and who hasn't.
Well, yeah, who's playing the system, who's playing the game better than the next person.
Well, yeah, but it's not even the ability to play the game. Rich people can buy houses when they want, and that's what I'm saying. They're outbidding the first home buyers or other people who are trying to buy homes. Why? Well, they got $1 million or $2 million laying around. Right, and the bank says, I'd rather lend to Steve, who's got $1 million or $2 million, than lend to Jacob, who's, he's got the deposit, but man, it's a 25-year loan, and he's young, he'll probably have kids. I don't know about that. Just give it to Steve, right? And Steve wants it because Steve wants to buy a house for his kids, or he wants to have an investment, and he doesn't understand the stock market, all that sort of stuff. Yeah. So it's just a lot more nuanced.
Yeah, and I mean, older people are living longer nowadays as well. They're working longer, living longer.
Yep. Just talking to a lady, this morning at the coffee shop about that stuff, right? They've got an investment property and her mother-in-law is in it, right? It's in a nice area. It's 3-bedroom. She's 91 and she's still driving, right?
That's terrible.
So,
yeah, killing it.
But to your point, Jacob, that house would have been available generally 15 years ago.
Yeah, back in
right. They'd have, grandma would have died and they'd have sold it or done something else. But my point being, you've got a lone 91-year-old in a 3-bedroom house, and this is again part of the problem. Old people have got the assets and say, no, I don't want to rent my unit out down the coast. No, I just want to go down on the weekends.
Yeah, I mean, which is in a singularity fair enough, but when it's happening across
the aggregate level, you find out there's 300,000 spare apartments because people want to, go to their holiday house.
Yeah.
So it's a real problem, but it's a problem of distribution in terms of who's got the money.
Yeah.
Right.
Okay.
Yeah.
I think it's so interesting. We talk
100%.
Yeah, we'll do a big.
Well, the argument is you see everyone go, but when I took a mortgage out, it was 18% interest, and we lived on spaghetti. Like,
beans
people need
toast.
to just cut their coffees out and pull their socks up and get stuck in. Which, to a point, that's part of it. It's not the whole story, though.
Yeah, but you shouldn't. Yeah, but
17%
we're so
on
hard.
200 grand is way different than borrowing 1.3.
It's I think part of the problem is we're so harsh on young people these days. There's so much stuff now about, and I'm seeing this in America with the manufacturing stuff, right? Which is, we can't get kids to do jobs. Bullshit. That's absolute bullshit. You offer young children jobs, kids jobs, they will generally take it. Sure, there'll be one or two who's a lazy bastard, but
that's been in every generation, though.
But that's what I mean. Every kid, kids want to work and they want to earn money. But the problem is the jobs are not there. So what we do is we go, the kids won't work. It's like, really? I tell you what, give them a job and see how they go.
Well, they're less resilient. And what a matter of fact is I think kids these days are probably more resilient because they're having to deal with more.
Absolutely.
Without turning into a psychology lesson. They're dealing with more every day. Social media, friendships, school, that kind of stuff.
Yep. And I just think young people get the rough end of the stick in generally every generation. But part of it is because of this idea of, you see this everywhere where, the meme these days is you've got to be resilient and tough and, all this sort of stuff. And it's sort of like, well, yeah, okay, but we don't have to treat them all like prisoners. We need to build a civil society, but if you just make them all into soldiers, well, guess what? They're going to start fighting. That's the way it is.
Yep.
Anyway, that's off track.
Next thing in the weekly highlights, critical minerals. Seeing more and more headlines about this, people getting more and more aware of the stronghold China has on the rare earths and mineral processing, right?
Yep.
We're getting all these countries are putting a lot of money now into developing their defensive sector.
Yeah.
And critical minerals, as we know, is a huge part of that. I mean, you can just see in Europe in general the amount of cash they're throwing at defense now. China's obviously a major player in this, in how they handle and refine critical minerals. And we're seeing new highlights every week now of how that's changing and how they're trying to get around it.
Yep. The reason why is, long story short, now for our subscribers, I'm doing it in the newsletter, which will be out within about a week, to talk further about this because it's a pain point. It's a choke point, right? But essentially what was this? We used to produce rare earths, right? And you don't need a lot of them, but they're critical, right? Then as we discovered more and more about, we can manipulate neodymium and dioprosimium and stuff, they went, oh, cool, okay. So now we've got a smartphone. Now we need a lot more of this stuff. But it's really toxic, right, to mine it and to process it, right? So they go, oh, okay, this is really awful. China says, hey, we'll do all that shit for free, right? So that Chinese now have got a lockhold on the processing of it, right? That's great, so long as we're friends with China. The American government comes along and says, actually, we need these for a whole range of military hardware, right? This is the crux of the matter. Then the Chinese go, well, we process 90% of this stuff. So you guys are relying on us. That is the sole point about why the American government and Trump in particular is saying we got to extricate ourselves from this relationship because they are completely reliant on China, right? So China has them over a barrel, right? So the US have said, we got to fix this up. Well, naturally enough, China went, okay, well, best of luck, right? So now we're going to spend a lot of painful time and money trying to redo these processes, but they're really toxic, right? So you'll have a bunch of greenies screaming, going, we can't do this, we can't do that, but it's the sole source of the problem, and it's the same with all manufacturing.
From an investment perspective, then, would it be worth finding companies in the US that do this or other countries that do this and looking to see if they're well valued?
Yeah. That's what I'm going to talk about in the newsletter.
Okay.
Right. But generally, the answer is yes. The development governments have woken up now. Australia is a major player in this area. So it will be a decade, 2-decade issue, right? Because now we've got to, the idea in the old days, it would be we're going to make T-shirts, right? Oh, okay, we'll knock up a shed and put in 40 people in a bunch of sewing machines, right? this stuff is so unbelievably complex that it's not something where you go, oh yeah, we'll be right. We'll be doing this stuff by, December. Right? This is a 5 or 10 year project. Energy intensive.
Lots of loopholes to get through.
Yeah, the TSMC, the semiconductor manufacturer, if you go to their factories, it is the air is like 99.999% pure. That's how it's got to be operated. So do you know what I mean? Like the air filters have got to be absolutely unbelievable.
I've been to a semiconductor place in Brisbane and it's mental.
Yes, it's wild.
Like, yeah, everything is pristine.
Absolutely.
Everyone's wearing, suits.
Yep.
You know.
Hazmat suits
Yep.
and, covered from head to toe.
Yeah.
Yeah.
It's nuts.
Yeah, that's awesome, actually.
And that's why I'm saying this is not like, oh, yeah, we'll just knock one up in the back shed and we'll replace China in 6 months, right? And part of it is we haven't even got the knowledge, right? Now, again, this week Donald Trump revoked visas for foreign students, aiming at Chinese students. Why? Because the Chinese are coming over, getting America's knowledge and taking it back to China. And then the CCP are saying, great, now we can do our own stuff here. So again, this is all tied in because the Chinese are going to the American market where all the knowledge is, getting the knowledge and then going home and doing it themselves and then saying to the Americans, now we're going to hollow out your industry, right? Which is what they've been doing for 30 years. And the universities in America have been going, yeah, well, we don't care because we're making lots of money out of foreign students.
Well, that's the thing they need to combat, right? Because they're making so many, probably hundreds of millions of billions of dollars from foreign students.
Yep.
What happens now?
Now they get a real pain point, and this is the conflict that's going on.
Or is it
right?
just going to be another Trump thing where he puts it on, takes it off next week, and
well, probably not in this case, right? Because, and again, look, I don't think a lot of people in the market are grasping how important this stuff is, right? They're talking, and this is the point about tariffs, right? And you guys have, we talked about this last week, right? Trump says they're tariff, right? Market sinks. Trump says,
not really.
I'm going to delay them, right? Market rises. Trump says, no, there's going to be export controls. Market sinks, right? Then Trump goes, oh, I don't know about that. Okay, now the market rises. So what I'm saying is everybody's sitting here going, tariff? Oh, that's bad. Market falls. No tariff? Okay, market, that's good. So this volatility that we've got is really hard for a lot of investors. But the point also is we are in a stage of transition. And so it's really, it's really difficult to say, hey, Jacob, you should buy NVIDIA. And then next minute Trump says, listen, no more chips to China. NVIDIA's value goes from 3 trillion to 2 trillion, right? But you bought it at a valuation of 3 trillion thinking it was going to 4 trillion. That's the problem for investors, right? And that's why I think I said in the blog, you've got to be, you've got to have a broader picture and understand the national security elements of this because it will impact you as an investor. And if you don't know, I'm telling you, you'll be in for a world of pain.
You'll be caught in the volatility and just lose.
Absolutely. Well, you'll be caught in dud investments, right? Because you'll be thinking, oh, yeah, the last 30 years, Apple has been great. Okay, well, it may not be great anymore, right? It will still be around, but Trump has said to Apple, I don't want you making phones in India. I want you making phones in America.
Yep.
So
Bring it home.
Okay, so there's another... Okay, 100 billion Apple's got to spend. Okay, well, maybe it's not worth, $100 a share. Maybe it's worth 90.
Steve, have you ever heard of a company being worth in the trillions market cap?
No. This was about, and I remember this because it was David Einhorn, who's a fund manager.
Yeah.
He said, might be 15 years ago, he said, just think Apple could be the first $1 trillion company. And saying it like, man, that's wild. No, that's not going to happen. Now there's I think the other day there was 9 of them, right? There's like Facebook, Meta, even Berkshire Hathaway, right? But I think they're all...
Trillion sounds like a made-up number. It's
Well, I remember-
ridiculous.
Yeah, you can't really picture it, can you? No, here's $1 trillion. It's like, okay.
It's so much more than $1 billion
Trill.
as well.
Well, they're talking about Elon Musk being the first trillionaire.
Yeah. Well, I remember being at school and people, it was some teacher going, there'll only be trillionaires when we can mine things off-world.
What
What,
about
like out of, yeah, they're talking about mining
meteorites
asteroids
and that
stuff.
kind of stuff. Yeah.
what about zillionaire? Dude.
What about what?
We'll be the
Zillionaires?
first zillionaires.
They were around when I was a kid.
Yeah.
Who's your zillionaire? Well, I remember I think I've told the story before. We had a friend, my father had a friend in Fiji, right, when I was 10. So that's 52 years ago. And he was a millionaire. And it was like, man, he is so rich.
Yeah.
Right? And it was like now every man who owns a property is a millionaire.
Yeah, well, that's right. The jump from million to billion is outrageous as well. People don't quite grasp that.
Not if you earn, remember the chart? Not if you earn 7% per year.
Not yet.
That's the first 100,000, Jacob.
Compound at 7%.
Point being, though, when those things crash, what that will do
Absolutely.
to the market,
It'll be really, really, really painful, Tom.
like, you know,
Elon's-
50% drop is nothing compared to when
Well, the NASDAQ went down 80%
that's
in
made
the
up.
.com. Right? It went down 80%.
Yeah.
Amazon
That's
lost
full of all those
95%.
oh man,
Right? Like, you cannot picture that stuff. You just, the brain is incapable of going, yeah, that's feasible. But it happens all the time.
maybe I can buy.
happens in cryptocurrency.
I'm going to buy
heaps.
like 5 whole shares when they drop 95%.
Yeah, when you then think it's a bargain and it goes bankrupt.
yeah. Anyway, let's talk about emerging markets. It seems to be a really hot topic. People search for, ask questions about, talk about it. We've been to the ASX conference for a couple of years in a row now, and they're always talking about emerging markets, and that's where the opportunity is. Obviously, the US has been just on a tearing run for years and years and years now. Emerging markets have kind of fallen quiet. But that's often a good thing, right? If you think of Buffett's philosophy, look for something that's undervalued and not talked about. But emerging markets are quite risky as well.
No, not really. There's a certain level of risk. It depends who you're talking about. Argentina is risky.
Yeah.
Right? But places generally, even Argentina, we use these in the Well 2 strategy.
Yep.
But generally they're not that risky. And this sort of gets into a little bit, Jacob, about the economic myths we want to talk about. But the point being, emerging markets are really cheap. And as the chart there shows, right, that America's killed everybody.
Yeah.
Since the 2009, right? Why? Because the Cape was 12, right? In other words, the US was absolutely screamingly cheap in 2009, right? Whereas now it's at 36, and the emerging markets are at 12, right? Well, okay, where would you rather be in a market that's 100% overvalued, the US, or in markets that are probably 40 to 50% undervalued, which are places like, Brazil, Turkey, Mexico, Colombia, there's heaps of them.
Yep.
Right? And they pay great dividends. You don't have to buy the companies if you don't want. You can buy the whole country, right? You're not going to wake up and go, oh, Brazil's just suddenly fallen into the ocean. Oh, bugger.
Well, there's emerging market ETF.
Absolutely.
But we've had quite a few over the years that have performed well.
Absolutely.
Yeah.
But and that gets back to, Tom, the process, right? The systematic approach that we take. But point being, emerging markets are quite cheap at the moment, right? And they're probably a better long-term bet than the US.
Yeah, if you can take your rose-coloured US glasses off.
Yes.
And just look at it through an approach that's not just biased towards the US, then you can see that there's more opportunity out there.
Look out of the windscreen, not in the rearview mirror. Right? That's what you got to do. Most people are looking in the rearview mirror and going, "Oh, the US is gone gangbusters." It's like, yeah, I know, but I'm investing now to get money back in the future. So what am I? What's looking good for the future? And the valuation says emerging markets.
Yep.
Awesome.
And Europe.
Yeah. Yep. Good. All right. Well, economic myths. Let's talk about that. I know Steve's been
A new segment. A new
It's
segment.
a new one.
It's huge.
Well, I just what I want to do is a lot of stuff you read in the mainstream media is not exactly correct in terms of economics. Part of it is, and I'm not being arrogant, all I'm saying, part of it is the theory that they use is not very good. And it's old, and as you said before, Jacob, it's tied to the gold standard. Right now, we're not going to indulge into that. All I want to say to people is everything because the US government is now running a budget deficit of about 6% of GDP, what markets say and what the theory is, the government's going to go bankrupt because it's going into debt.
Well, people have an absolute tiz when governments overspend.
They don't, well...
Generally speaking.
Yeah, people don't understand that the US government creates money.
Every government does.
If they have a sovereign currency, yes. Right? So the Argentinian government creates Argentinian dollars, right? The British government creates pounds. The Australian government creates Aussie dollars, right? I can't create my own money. Well, I can, but nobody's going to touch it. Right?
Steve Coin.
Yeah, Steve Coin. Hey, I want you to, right? But this is serious. It's like Bitcoin, right?
Yeah.
You've got to have acceptance for it to actually have some sort of value, right? If I give you an Australian dollar, you go, that's worth $1.
Yeah, it's understood.
Exactly. And this is the argument I have with Bitcoin, because I can give you one Bitcoin, but the volatility can mean it's worth 170, 100, 120, 240, right? So that's too volatile to be a currency. But my point being, if the Australian government can create money, it's not like a household. So the Australian government can spend as much as they want. Now, there's an issue with inflation, but they can't go bankrupt, right? And this is what the markets are worried about, and bond yields are rising. The American government won't be able to pay its debts. Well, that's wrong. The debts are in American dollars. They can say, Jacob, I owe you $1 billion. There you go. I just marked up your bank account $1 billion, right? So when you get your tax return, they don't write to you and say, Tom, can you come in and we'll pay you your $2,600 in $100 notes? All you do is you go to your bank account and they go, Tom, you had $1,000, now you got $3,000, right? It's a number on a computer. That's all it is, right? And it's bookkeeping stuff. But it's really important because people think when the government spends money that it's money that it hasn't got, right? And all the government does is say, we've got a budget, right? This is what politicians do. They put a budget through Parliament. Everyone agrees we're going to spend 3% of GDP, right? Okay, so the government says, or the RBA say, okay, how are we going to fund it? Now they can say, all right, what we'll do is we'll go around and we'll tax Jacob and Tom more. Now you've got less money, so that means the economy's going to fall. Or the government can say, well, I tell you what, Tom and Jacob have got excess money. They're actually looking for a safe asset, so we'll sell them bonds, right? And we'll say to Jacob and Tom, listen, we'll give you 4%. And you go, oh, cool, okay, I'll buy bonds. So that's another alternative, right? But the main point is the government can't go broke, right? Now, they can get in trouble with inflation and stuff, but they can't go broke. And countries that have bankruptcy problems, it's usually not just, what people call printing money, right? It's usually social trouble and all sorts of stuff, right? Fraud, corruption, a lack of a rule of law and all that sort of stuff. But it's just really important, because the reason why is because you're going to see bigger and bigger deficits over the next 5 to 10 years when the government says, I need to buy, as Jacob said before, I need to buy 100 new bombs, I need 3 new destroyers, and I need 15 new tanks and aeroplanes.
Or if simply the government says, well, we're going to have another 5 million people in Australia over the next however many years. We've got to have more roads, more houses, more
infrastructure.
Hospitals. And I think one of the misconceptions that I would say people like my age have is, if the governments are in debt, to this extent, who's paying it back? How are we going to pay it back? And why do we need to pay it back?
Well, we don't need to pay it back.
This is what I'm saying. People think we do.
Yeah. Oh, we're going to leave the debt to my grandkids.
Yeah.
Oh, Jesus, like my grandfather left to me.
Or we're going to get taxed more in order to pay it back on money that we don't necessarily have because wages aren't rising.
Yeah, but the government can say, all right, well, things are going gangbusters and we've got too much inflation. Yeah. Right? So there's two choices. It's lots of choices, but they can say, the Reserve Bank can say, listen, we're going to cool the economy down. We might need to raise rates.
Yep.
Now, there's a problem with that now because in America, there's a heap of people who are getting now 6% on their savings. So they're going, this is great, right? The other alternative is they can say things are going gangbusters and it's really crazy. We'll take money off Jacob and Tom by taxing them.
Yes.
Right. We're going to raise income tax. Right. Now you have less money to go and buy coffee and stuff, and so the economy moves downwards. Right. Yeah.
Which the government also doesn't want.
Well, yeah. Who wants to be taxed? So it's
unless
but it's again
super balances over $3 million.
That's exactly right. But it's
unrealized capital
gains. It's a issue, as we've talked about in the new normal, with fiscal policy rather than monetary policy. Right, but all I'm saying is if you look at that chart, notice that we're back to the peak of where it was in 1945, right, which is, the end of the World War, right? So the other issue is...
And this is government debt, just for people that aren't.
That's right, yeah. Federal debt that to GDP, that's in the US.
In the US, right? Not here.
But my point being, see, if the government said to you, Jacob, you're a bridge builder, right? Now the government says, listen... We've got to build a bridge, right? And we're going to spend $1 billion, and Jacob, you're going to help us build that bridge. There's no way you're sitting there going, well, who's going to pay for that bridge? You're sitting there thinking, this is great. Government's going to give me money to build a bridge, and I'm going to make some profit.
Yeah, I've got a job.
So the government deficit is the private surplus, right? So if the government spends money, it's got to spend it on something. Right, well, there's people out there providing services to the government, right? There's something. So the government says, listen, we need 10 F-35s. And Boeing goes, cool, okay, we'll build them. And the government says, okay, well, we'll pay you to build the F-35s. Right? That's the way it works. It's not as if the government can create its dollars to do that, right? It doesn't say, man, I've got to go and hit Jacob up for some more tax to pay for the F-35s. Because all it's doing then is saying, well, I took it off Jake and I gave it to Tom over there who works at Boeing.
I guess it's just, again, to your point before on the inflationary aspect to that. Like, we don't want to end up like Greece in the 2000s.
Well, yeah.
Everyone's walking around with wheelbarrows of money.
Yeah.
For a coffee.
Yeah.
So that, and Argentina's, and Turkey is another one, right? Turkey has like 40% inflation.
Yeah.
Right? So they've got to give 40% pay rises. Right, and then inflation goes to 50, so they're going to give 50% pay rises. Right, but my point being,
Turkey's a fun one to rebalance, though.
Well, yeah, it is. There's plenty of volatility, but the essence is if the government controls their currency, then they can't go bankrupt. Okay, that's the point. Now, what's the point for investors when the government says, "Hey, we're going to spend a shitload of money"? Investors should be going, hey, this is great.
Which companies, which sectors?
Exactly. We talked about defence, 18 months ago?
Yeah, probably longer, yeah.
Now go and look at defence companies.
Yeah.
Right? They've gone gangbusters.
It was the topic at the conference.
Yeah.
Yeah.
Why? I'll tell you why. Because the government said, we need tanks. Right? Nobody says, oh, man, we can't afford that. Right? Everybody says, and this is the beauty of government spending on defence. Nobody ever goes, oh, dude, we don't need 100 missiles. We can't pay for them. Everyone goes, yeah, righto, okay.
Stock them up. Well, Boeing's up, 450% or something in the last
couple of years. Boeing, Lockheed Martin, there's heaps of Euro company, defence companies, and companies love that stuff. It's from the government, right? They're going to get paid. It's not risky.
Yeah. Well, I think
that's why you're seeing an absolute explosion in military spending.
Well, even Europe, I know we're spending a bit of time on this, Europe going from spending, 1% up to 3%.
Yeah, and Germany's talking about 5%.
Well, it's a 200% increase there.
Yep. And Germany, this week, there were two big issues this week. I'll just shove in these quickly. Two big issues. One is the Germans, the British, the Americans, and a couple of others said to Ukraine, you can now attack Russia, right? So when the war started, the idea is, look, we'll give Ukraine stuff to defend itself, but not capable of attacking Moscow,
long range,
right? Or Russian sites. That's gone by the wayside now, right? Because they're trying to get Putin to come to the table. The only way they can do that now is to say, righto, well, Putin, we're going to give Ukraine missiles that are going to lob into Moscow and into your infrastructure, into oil facilities, and that's what's going on, right? So that's a really big move. The Germans, who have been really pacifist for the last 20 years, have now said, right, we're going to spend 5% of GDP and we're going to cooperate with Ukraine to build missiles, right? So that's a really, really bad outcome for Putin, right? Because now the opposition, the Germans and the French and the British and the Americans, this is part of the problem because what do? They look at it and go, man, we can make some money out of these bombs. So what do? They say, hey, we'll help Ukraine, right? That's the way. That's why I said a few months ago, don't think war costs a lot of money. The US government's making plenty by countries going, can we get some more of those F-35 you guys have got? Right? The US says fine.
And the dance continues.
Yep.
Lesson of the week, it fits into economic myths, but essentially when public spending goes into surplus, it's a balancing act, essentially, between state, domestic, businesses, private sectors.
You've got to look at the whole picture, right? So when people say rising interest rates are bad for the economy, what you have to do is say, okay, the government's paying out more money in interest. Yes. Okay, well, that means somebody's getting the money. What are they doing with the money, right? And that's why I say you got to look at the yin and the yang, right? It's no good saying government debt's bad, right? When you say, okay, well, yeah, Jacob, it's terrible. Actually, the government are paying you to build a bridge. You go, oh, hang on, that's actually good. Now we've got a different approach, right? Because you're looking at both sides of it. You're not looking at one side of it,
which is good for everyone, right? More people get paid. They spend money going out, buying clothes, doing the thing.
Boosting the economy.
100%.
Well, I'll tell you what, do yourself a favour, go and have a look at stock returns when governments spend big deficits.
Well, you just got to look at America the last 10 years.
Well, yeah, I know that you mentioned it in here, but when Bill Clinton put the US public spending into a surplus, it went into recession.
Yeah,
and every time in the US does that, it goes into recession.
Yeah.
So
look at COVID.
So why is it anyone pushing for it?
Because it's ideology. Because it's ideology,
It's
Tom.
just a belief.
It's the ideology that the individual shouldn't be dictated to by the government.
Or just because Steve shouldn't be in debt, the government shouldn't be in debt.
Yes, that's right.
I don't want to be in debt, so the country I live in also shouldn't be.
If personally we're in debt, that's not better for us.
No.
But well, think about it this way, right? Let's finish with this. The Australian government, there's so many commentators out there going, the Australian government's spending so much money, right? It's all terrible, and profligate spending, right, on the NDIS, right, the Disability Insurance Scheme, right? The Australian government is spending about 1% deficit of GDP, right? Now, have a think about this. If you had a budget and you were spending 1%, you wouldn't exactly be going, oh man, I'm in a deep hole here, right? It's 1%. It's bloody well loose change. But all the economists out there are going, oh my God, this profligate spending. It's like, dude, it's the only thing holding the economy up.
Yeah.
Right. And they're all and that's because they're ideologically opposed to government deficits because they think what we've argued, my grandkids are going to have to pay it back. Well, it's all bullshit. Yeah. Right. But because
it's not backed by the gold standard anymore.
Well, yes. And they don't understand the way modern money works. Yeah. Right. All the people at the banks and the Reserve Bank understand it. Right. But there's heaps of politicians who don't understand it. Right?
Yeah.
because they're all working off the old theory.
If anyone has any questions, by the way, feel free to reach out on socials or support at Total Money Management. I think we might leave it there, gents, so that's all right.
Perfect.
We'll see you next week.
Thank you.
Cheers, folks.
As always, remember, we don't provide financial advice.